Have you ever seen a company report incredible numbers, beat Wall Street expectations, and then watch its stock fall anyway? Well, that's exactly what happened with Tesla. Tesla just delivered more vehicles than almost anyone expected. Investors were celebrating before the report. Analysts were raising expectations. Everything looked bullish. But then, Tesla stock started dropping. So what happened? Did Wall Street suddenly stop believing in Tesla? Or is something much bigger happening behind the scenes? Stay with me, because the real reason isn't the delivery numbers themselves, it's what those numbers might be hiding. Now, let's break it down. Tesla reported more than 480,000 vehicle deliveries in the second quarter. That easily beat Wall Street estimates. Normally, that's exactly the kind of news investors love. Higher deliveries usually mean stronger revenue, and stronger revenue usually pushes the stock higher. But the market doesn't only care about how many cars Tesla sells, it also cares about how much money Tesla makes on every single car. And that's where the concern begins. Now pay attention to this. Tesla didn't achieve those record deliveries by simply having unlimited demand. Instead, the company spent months offering aggressive discounts. It rolled out cheaper financing options. It introduced attractive incentives. And it worked hard to clear existing inventory. All of those moves helped boost deliveries. But they also create one big question. Did Tesla sacrifice profits just to increase sales? Because selling more cars is great unless you're making much less money on every vehicle. That's exactly what investors are worried about today. The next earnings report could show shrinking profit margins. And for Wall Street, margins often matter even more than revenue. A company can sell more products, but if profits fall, investors quickly become nervous. This surprised Wall Street. Many retail investors looked only at the delivery numbers. Professional investors looked one step ahead. They're already thinking about Tesla's next earnings report. They're asking one question: how profitable were those deliveries? And nobody knows the answer yet. But that's enough uncertainty to push the stock lower. There's another reason behind today's decline. Tesla had already been climbing before this report. The stock rallied more than 8% in the days leading up to the delivery announcement. Why? Because investors became excited about Tesla's self-driving technology. There was growing optimism around the company's AI ambitions. Many traders expected strong delivery numbers well before they arrived. So when Tesla finally released a report, much of the good news was already reflected in the stock price. This is something Wall Street calls sell the news. It's surprisingly common. Stocks often rise before an important announcement. Then, even after good news arrives, investors lock in profits. That's called profit taking. Think of it like this. If you bought Tesla shares several days earlier, and the stock jumped nicely before the announcement, would you wait around hoping for even bigger gains? Or would you secure your profits? Many professional investors chose to cash out. That selling pressure alone can send a stock lower, but that's still not the whole story. Here's what could happen next. Tesla isn't competing in an empty market anymore. The electric vehicle industry has become incredibly competitive, and one company is putting enormous pressure on Tesla, BYD. While Tesla posted impressive deliveries, BYD delivered even more battery electric vehicles during the same quarter. In fact, BYD regained the global lead. That changes the conversation. Tesla is still one of the world's most important EV companies, but investors are starting to wonder whether its dominance is slowly fading. More competition usually means lower prices. Lower prices usually mean lower profit margins, and lower margins can eventually impact earnings growth. Wall Street knows this. That's why competition matters so much. Then came another headline that grabbed everyone's attention. Michael Burry, yes, the investor famous for predicting the housing market collapse portrayed in The Big Short. He disclosed a new short position against Tesla. Now, one investor doesn't determine where a stock goes, but when someone with Burry's reputation bets against a company, people pay attention. His concerns reportedly include Tesla's high valuation and delays in important long-term projects. That doesn't automatically mean he's right, but it adds another layer of uncertainty. And markets hate uncertainty, so let's put everything together. Tesla beat delivery expectations. That's positive, but investors now worry those deliveries came at the cost of lower profitability. The stock had already rallied before the announcement. Many traders decided to lock in gains. Competition from BYD continues to increase, and a high-profile investor is publicly betting against Tesla. When all those factors hit at once, even great news can lead to a falling stock. This is one of the biggest lessons every investor eventually learns. A great company doesn't always mean a rising stock, and good news doesn't always push prices higher. Sometimes expectations become too high. Sometimes investors focus on future profits instead of current sales. And sometimes Wall Street simply decides to take money off the table. Looking ahead, the next major catalyst will likely be Tesla's earnings report. That's where investors will finally see whether profit margins held up despite all the discounts. If margins remain strong, Tesla could quickly regain momentum. But if margins disappoint, the stock could stay under pressure for a while longer. Investors will also continue watching self-driving technology, AI developments, future vehicle launches, and whether Tesla can defend its position against rising global competition. So today's decline doesn't necessarily mean Tesla is in trouble. It simply shows that Wall Street is looking beyond today's headlines, and sometimes the numbers behind the numbers matter the most. Now I want to hear from you. Do you think today's drop is just another buying opportunity, or is Wall Street warning investors about bigger problems ahead? Let me know your opinion in the comments. And if you enjoy simple, fast, no hype explanations of what's moving the stock market every single day, make sure you subscribe, because the next big market move could happen sooner than you think.